this business comes down to three things. It's about the people, it comes down to processes, and then, in this day and age, it's technology.
Today, my guest is Tim Hall, CEO of Relation Insurance. Tim, how are you today, buddy?
Doing well, Al. Pleased to be here with you.
Tim, you and I don't know each other a long period of time, but I feel like we do. We've built a great rapport and relationship, and I view you, very admirably as what you've done and the great story that you have. So, obviously, we've been working together now probably the better part of, 3-4 years, I'm going to guess.
But a little bit longer. I think it's been closer to about 5, but nobody's counting.
You have a terrific background. You have a great story. As a young man, you're sitting at the top of this $350 million national broker and have done a fantastic job in the role that you're playing, all the roles you played, and I've seen 3 of them at this point, right, since you joined Relation. So, Tim, maybe you want to give a little background on yourself first. So tell your story. You're only, 40 years old? You're probably one of the youngest CEOs in the business, okay, if not the youngest, which is very, very awesome, to see. You can talk about Relation and, some of the things you're doing, their plans, et cetera, et cetera. Then we'll kick around the marketplace a little bit.
Great. Yeah. So one, thank you for that intro and those comments. It's kind of you. Our team definitely enjoys the relationship we have with the Sica Fletcher folks. We know that, when we get something from you guys, it's going to be quality, and we're going to, if we get it signed up, we're going to get it closed, which, we value certainty and process, above a lot of other things. So just quickly, background. I've been with Relation now a little over 6 years. Prior to joining Relation, I was an investment banker focused exclusively on the insurance sector, as you know. Joined a boutique bank in Chicago out of college, and worked with those folks for the better part of about 13 years, both on the carrier side, distribution, services, and I like to say if you could buy it, sell it, or raise capital for it in the insurance sector, we tried to work on it. When I started out, the preponderance of our work was actually on the carrier side, P&C, mutual, specialty, life and health, Bermuda, Lloyd's, NewCo formations coming out of Katrina, Rita, and Williams in 05 and 07. And then going through the financial crisis, did some work with banks around TARP, worked with AIG on their troubles and their ultimate re-IPO. And then coming out of that financial crisis, that's when private equity, really started to take a pretty hard stare at the brokerage sector. Obviously, there were a few in it, prior to that, but it wasn't to the degree that it is today. Like all good bankers, we go to where the activity is to make sure we're involved and have a chance to get a fee. And as part of that work, I spent a lot of time with the leaders in the industry today, Hub, Alliant, Gallagher, Assured Partners, and the various sponsors that were, in and around those names and others, both working on their recapitalization events, debt events for them, as well as selling them some larger assets. Through that activity that I actually got to know Relation, they became a client of mine in 2013. Relation started as a private equity-backed broker in late 2007. 2 private equity firms gave the founding CEO some capital to really go out and mimic what someone you've already spoken with on this podcast has done, Greg Williams. They were trying to mimic that playbook, and they went out and they acquired 24 assets in the span of 36 months. Then the financial crisis hit, and then the firm really had to pivot and abandon that strategy. They changed leadership, and the board decided to go on a more organic build with a new CEO, focus on integration. And it was at that time that I really got to know the firm, spent a lot of time with the leadership team, walking through, the various changes in the industry, what their strategic alternatives could be, various capital solutions, and then ultimately was hired by the board to take Relation to the market in 2018. And that culminated in a transaction with a private equity firm called Aquiline Capital Partners, who is still Relation's capital partner today. Aquiline called me and said, "Hey, would you like to come and practice what you preached about just needing the expertise? We have the capital." And at the time, I was a partner in an investment bank. We had left a larger bank and formed a new shop, and we were autonomous. I likened it to being the CEO of a mutual company where we didn't really have a boss. I had seen the movie enough from around the industry for, the better part of, 13, 14 years. Had seen capital come in, had seen folks do really well. And I'm a big believer in the mosaic theory of investing. You take all these little tidbits of knowledge, put it up on the wall, and it tells a story. And the story that it was telling me was, you can take the greatest hits of what folks before me have done, put it together, and affect that plan on a firm. And Relation was the firm that I got to affect that plan on, initially as, the head of M&A, and then ultimately in my current seat as CEO. So there are days where I miss investment banking because it was, you're just getting the deals and you jump from one thing to the next. But I think I'm where I need to be running a company like Relation with some of the great teammates I have, great capital partner that I have, and fortunate enough to be here. So
It's an interesting story because you evolved very quickly, like me joining and starting to be a CEO of one of these things. And obviously, I'm not an insurance guy. I know enough to be dangerous. Although what people don't know probably about me is before I started this gig at 26 years old when I started this. Okay, my first years out of college, when I found out that I wasn't going to get drafted to play baseball after playing Division One, I went to work for Liberty Mutual. And I still hold all my licenses, believe it or not, and that's because I've earned them. I knew a little bit about insurance, and the only reason that I ended up in this crazy world is I went back to the headhunter after I left Liberty, and he said, well, why don't you, what do you want to do? And I said, not insurance, because Liberty was a direct writer. It was boring, and, no disrespect to them, a great company, but he said, well, why don't you do what I do? So I started this from the executive search side, but I would never claim myself to be an insurance guy. I obviously, in 37 years of doing this, I know the insurance industry and everything about it inside out, upside down, but really, fell into this deal thing really late 90s and early 2000s when we started doing those bank deals for all those big brokers in New York Metro. It's been a great run. So what you've done is pretty incredible, Tim. I wouldn't poo-poo where you've come from and where you are now. To me, I'm really admirable of what you've done. And you're super smart. You're great to deal with. You got a good personality. You're good with your people. I think what you've done is a little bit different than some of the others. You're following the same blueprint as Greg Williams. I would say that, and I've said it on multiple podcasts, Alliant was really the poster child. They were fantastic. So I think you're at 350 million-ish. I think that's right where you are right now, and right now is a great number. You've been very selective in how you built this, where others might have really wanted to aggregate and then integrate. I think you've been very selective, and I say this very positively and in a very good way, that you've been very selective and really have done strategic deals and integrated them. And I see it even in the processes when we go through diligence into legal, that integration process is already starting. And I think you've done a really good job with that, Tim.
No, thank you. Yeah, when I joined, we had two choices as we went down an M&A path. It was continue the integration work that my predecessors had done and done all the spade work on, or go really assertive and quickly on the amalgamation of assets and then deal with the integration later. And I'm not that smart of a guy, and I just couldn't see the industrial logic and the thesis behind doing a bunch of acquisitions and then having to at some point herd all these cats down the road. Instead, you going back to my taking kind of the greatest hits, what if some of the ones who focused on integration, how did they execute on that strategy? And it was a more deliberate, thoughtful approach to M&A, do integration quickly, be very transparent with people on what integration is and what it is not. And it's integration become one of the most bastardized words in our sector because everyone has seemingly a different definition of it. But we are not all things to all people. You guys know that. We need to be able to ensure that folks that we're bringing in are going to have success with us, right? Because them having success generally will lead to others saying, hey, if Relation, they plug something in here that helps their acquisition partners grow. So integration for us it's the whole shoot and match. And it's not just what they bring to the table for us, but what do we bring to bear for them that is going to make them say, you know what, I want to choose to go with relation. Yeah, the integration strategy has been key to us. We spend a lot of time on it. We spend a lot of money on it. We're very deliberate with it, but we have a pretty good playbook now. But if I look back at the playbook we wrote 6 years ago, I'd be embarrassed because it's almost 180 degrees different. We still integrate, but the way we go about it is changed. As we've gotten more experience, we've gotten a lot more sophistication around it. We've hired some tremendous talent from across the industry and outside the industry. And obviously with anything, when you have, we've done north of 90 transactions, just like with baseball, when you take that many, rips in a batting cage, you're going to get better.
Well said. I think I see it. Private equity kind of really started getting interested in this industry, after the financial crisis. But, I really think it was 2011s, 12s, 13 is when you really, Acrisure got their money and we started rolling there. Private equity has been integral in really changing this industry. Okay, and they've gone in different cycles here. And, anybody that's got a 5-year plan, they should throw it out the window because you can't predict what's going to happen in the world, let alone the marketplace, right? Or the interest rates now, and so on and so forth, would have made a little bit of a difference. Not a lot in the values, but more of the selectivity now of how you use your cash, right? That's been really important. And I think you've kind of adopted that even before the interest rates. And the private equities now, where really what the Greg Williamses and the Acrisures of the world did was created this decentralized model that really took the entrepreneur and got them interested because they lease change, still, and the shareholders, they feel like owners. But as things evolve, as you could see, and the world changes, integration is huge, selectivity is huge, and of course, organic growth, that what you're putting together is working. Everyone's working together, you're cross-selling. I know that's an overused word or phrase, but I think, Tim, from what I've seen from you, the discipline has been from day one is selectivity beyond the interest rates going up, and integration. Build for quality, not quantity. And I think a lot of guys built for quantity first, and now they're having to shift gears into quality. Insurance brokerage is full of a lot of entrepreneurs and family businesses. That's what it is. But it's those renewals keep a lot of B and C players in the ball game. And I don't say that negatively, but those renewals can make a good living for someone for a lot of years. Whether you're under $1 million in revenue for 100 years, you can survive. And we've said it a bunch of times. The local agent, the barber, they go to breakfast together. The barber, the insurance agent, the hardware store guy. So, I think you've been smart, and even at your size and scale, which isn't small, you've been able to go coast to coast. You're not in every state, obviously, but you've been able to cover coast to coast, and despite this thing was really Midwest, West, really, and I think you're headquartered now finally in Chicago, where you're domiciled, right?
We are, yeah. We went from 4 states in 2018, with California being the majority of the revenue, and the rest was actually in the Southeast. Kansas City was at one point, but that was just corporate. There was no revenue there. And then today we're in 28 states. Corporate headquarters transitioned from California to Chicago first of this year. And we operate as a regional structure, west, central, and east, because we're really creative with names. We do platform acquisitions in each of those regions, and then give those folks, the tools and access to capital that they need to grow. It's working pretty well for us. But again, not everything is rosy. There's pitfalls when you run any business. Obviously, interest rates have been one. You got the insurance market itself. Is another dynamic. We've lived through part of the hard market, the last couple of years, and now you're starting to see pricing wane a little bit. And the challenge that we have every day is, how do we get up and serve our clients in the face of whatever the pricing environment is, whatever's going on internally at Relation on the integration side? How do we best serve our clients? What decisions are we making strategically today that are going to ensure that our clients are better served under us than elsewhere.
I always laugh when they call me and say, we want to invest in insurance brokerage. We have a guy that we're going to bring in to be the CEO. And I said, well, I'm not interested in that. And why? I said, because if you're not backing a leader to start with, it doesn't work. How do you come in and say, this guy's going to run a business? He had no idea what it is. And you have a leader in place, unless the guy just wants to take a bunch of money and walk away. You got to build within, and you got to build with talent, people by people. And I think you've done that. You got some good examples of that. And I think it's helped you get a good mix and mesh of your business. Why don't you talk a little bit about what the business looks like today? We talked about the regional structure. You talked about the states you're in. What does it look like from a business mix, Tim?
Yeah. So today, well, one on the people point, you're absolutely correct. It is, our president, Russell Brown. He was my first acquisition in October of 2019. Quickly promoted him to chief revenue officer, and then he ascended to the president role when I assumed the CEO role. That's been tremendous to see. And each one of our regional leaders is actually the product of an acquisition as well. That's how they joined relations. So we are firm believers in hiring and promoting from within. They know the company the best. They know the customers the best. They know our producers the best. That said, we augment with external talent too. Our chief operating officer, I initially hired him as our chief broking officer. He was at Marsh and then another private equity backed firm called Integra for a while. And so he had seen the movie from the big shop, Mother Marsh, and he'd seen it from a PE-backed firm, and we needed his skill set internally on some of the operations things we were doing on the integration front. So to your question, the business today, we're about 80% P&C and 20% employee benefits. We're about 55% commercial lines, about 20% employee benefits, and then about 25 or so percent personal lines. Our personal lines practice is bifurcated. We have a ultra high net worth and a private client division. And then we have what we call mass affluent. Within the commercial, we're not true specialists and only focus on a few key areas. We do have some deep pockets of specialty within our commercial focus, including agribusiness, aviation, construction, transportation, nonprofits, municipalities. And a lot of those came by way of acquisition. You find a great firm that has a great niche, and then all of a sudden, that firm that was, doing $5 million of transportation business, now by plugging into our producers with our capabilities, they've doubled or tripled the size of their firm. Additionally, we also focus, we have areas, our geographies, they focus on small business as well. That is an often overlooked segment of the market. We also do life insurance. We have a life insurance wholesaler that we've added recently. On our employee benefits side, we have enrollment capabilities and other ancillary services that both our brokers need as well as external brokers. As we've gone along, and again, this is part of the strategy, it's when we do an acquisition or we do a producer hire, I'm constantly asking our teams, what products do we need? And then I, pick up the phone and call you and say, hey, Al, do you have anything? And you mentioned cross-selling earlier. One thing our team has done very, very well is trying to effectuate that cross-sell culture throughout the firm. And I attribute that to Russell and our sales leaders. When we 6 years ago, maybe cross-selling was $100,000 of revenue. And today it's a meaningful part of our sales budget. Folks are compensated off of it. We offer different reward levels for true cross-sold business above a certain amount. So it is ingrained in each of our producers. If you're a P&C guy, why not bring in the EB individual to your next account or next new business prospect? Go in there as a team. $60,000 potential commission on the P&C side account, round it out with the employee benefits, the executive life, the personal lines for the owners and the key individuals. And all of a sudden you're staring at a $200,000 revenue account that we've made quite sticky because we've interwoven different aspects of the business and products in there. It's very simply said, very hard to execute on. And I'd say, we're probably in the bottom of the third inning in kind of our rollout on it. But every time we do a new acquisition of a new product set or capability, we blast it out to our firm. We have, internal connector websites. We have our own version, of you can go in and type in, you're looking for architects and engineers expertise, and it'll pop up the producers that have that expertise coded to them internally. And at the end of the day, technology can only do so much. We tell our guys and gals, you just got to pick up the phone and call call the individual. We'll help facilitate those relationships internally as folks don't know each other, but we do a really good job of making sure that our producers are constantly aware of the products that we have, the acquisitions that we've done, because all of that drives organic growth, and that's what matters in this business. I don't want to buy a business. I tell all of our acquisitions, you're going to get a big old bear hug from us on day one, even before day one. And yes, it's going to be somewhat back end office oriented around integration, but you're going to be meeting a lot of people. You're going to be introduced to producers in your region and throughout the country. You're going to meet different sales leaders. You're going to meet different operations folks, because we want everyone to know the acquisitions that we're doing and the new capabilities or geographies that we have, because you never know who has a client there, who passed up recently on a municipality account because they didn't have the expertise. Well, guess what? Now we did an acquisition. Why don't we go back out and target that account? It's not only great new business for relation, great new business for that producer. It also helps our acquisition targets, hit earnouts and grow organically with us. So it's a very critical focus for us.
So, Tim, looking at the business today, what are the strengths and weaknesses in your opinion?
Our strengths, one, we've got a tremendous culture. Everyone says it, but we've done a really good job of building a producer-centric, customer-oriented firm. We call it, it's a destination firm. That's what we need to build. We are focused on making sure we are creating an environment for our employees where they want to stay with relation. We've done a tremendous job with that. Other strengths would be, I'll point to the M&A again. We've built that from a standing start 6 years ago to something that can flex up, flex down, be extraordinarily active, or take a step back if we're just not seeing things that pass the hurdle for us. Our new business, we have, and this is a pure credit to Russell and his sales leadership and his sales leaders. Our new business has gone up tremendously over the last 4 or 5 years. And that's, we're hiring new producers, experienced individuals throughout the sectors that we focus on in the geographies that we're in. We are doing acquisitions with high quality producers, and all of that leads to creating a very energetic sales environment, a very competitive sales environment. And our ability to drive new business is certainly a strength. Weaknesses, and look, we're only 350 million in revenue, and that's large, but it's also small, and it means we have a finite amount of resources to invest in the business. I'd say one area that we're catching up on, but it's going to be a focus over the next couple of years, is how are we better harnessing our data to help our clients and to help them grow and to help us grow. It's one thing to get the data. It's, what the heck do I do with it, now that we have it? So we're starting to make some serious investments in that. And I'd say another area of weakness is, specifically on the producer training side. A lot of our producers that have come to us are experienced, experience in the industry, experience in sales. They come via an acquisition. And the one area we haven't spent a lot of time investing in to date is that homegrown producer training. It is certainly on my list, but again, go back to finite resources. That's something we'll be certainly focused on in 2026 and beyond, because that is cheaper organic growth than all the others, but it's also can be very risky and expensive, and it takes a lot of time to stand that up and do it the right way. Those are just a couple. I'm sure there's a lot more. I could probably point out all of my weaknesses in there, and that's gonna take a whole other podcast. So
no. No, I think you did great. And listen, it's hard to be everything for everyone and try to accomplish everything. I mean, the bigger you get, the more you can do, the more resources you have. So, you're taking step by step. I think the things you are doing are really working for you. It's an interesting time in the market. We've seen some of these other firms that have followed the same blueprint, private equity backed, using your equity, which we all know is the secret sauce to all of it. That's the thing that really changed the industry aligning all these people with the equity. A lot of these people join on because that small piece or percentage of equity that's shared in these, mainly the closing payments, people use it in their earnouts too, is where the generational wealth is being created. They're trading off some of their equity for your equity. They're taking some nice chips off the table. You're hoping you're investing in the people that want to participate and grow the business so they can hit their earnouts, which gives them additional purchase price. You have to continue to be disciplined with your equity to make sure that you are positioning yourself to be able to be in some type of a liquidity event in a short period of time, whether it's 3 years, 5 years, or whatnot, because that's what is being sold to all these people that are joining you, right? So when you look at Relation now, right, you had the event in 18, right? And you're moving on right now. You're 6-7 years in with Aquiline, right, or so. How do you see the market? We're looking at some of these guys that grew to multiple billions of revenue. That you're terrific companies. Some that you probably emulate some of the things they've done. Okay, and they've now kind of hit a little bit of a wall out there to say, hey, maybe it's too hard to stay private at their size, and you're still in a really good size to be able to have more flexibility, in my opinion, okay, at your scale and your EBITDA size. But, as we see in these guys that got bigger, who are hoping to have another swing at the private market, not necessarily work out for them, to where now they either had to go public, which we all know it takes years to prepare for that, and it's not easy, and I don't think anybody was prepared for that. Or now the only way to get liquidity be part of a public company or a strategic and trading off. What do you think? Without getting specifics, and I ask everyone the same question, and I don't expect you to give me a specific answer, but the $64,000 question, what do you think is in store next for Relation?
Our goal would be to keep doing what we're doing. Bring in fresh capital, continue to grow, continue to make the necessary investments, continue to develop and create the differentiated broker that we aspire to be. That's the goal. That's always been the goal. That's been an attractant for acquisitions and producer hires. We think we're building something slightly different. I will never speak ill of any of our peers and competitors. I think this industry is large and has room for a ton of different models out there. I think ours is one of the best and is best suited for those folks that are more entrepreneurial oriented and want to take some white space and become the guy or the gal or the team in whatever segment or sector that we're not in. And at 350 million in revenue, we have a boatload of white space, both geographically and in specific products, for folks to do that. And I think the best way we can achieve that is with private capital. And there is plenty of private capital out there, for a firm our size. This. You're one of the ones that started this, but private equity, to be a successful private equity investor today, being invested in insurance brokerage is almost like you got to have it on the checklist. And there is a lot of capital out there that's been on the sidelines for a while. Private equity has north of $2 trillion that it needs to deploy. Brokerage is viewed as, a desirable asset class, because of the attributes of an insurance broker. High free cash flow, low capital expenditures. You can put leverage on them, which amplifies the equity returns, recurring revenue. So all of those traits make brokers, not just Relation, but brokers as an asset class, desirable for private capital. And I think how brokers have performed through various cycles, both economic cycles and insurance pricing cycles, demonstrates, our longevity and our success. And knock on wood, there hasn't really been, a broker that has, gone bankrupt or defaulted on its debt. And it goes to the attributes of the business. And I think Relation is well suited for the private capital markets. So, Our goal over the next 5 years is to keep doing what we're doing. Grow organically. Mid to high single digits. Target acquisitions that are equal to 10 to 15% of prior year's revenue in the current year. And if you do that, in 5 years' time, we can triple the size of the firm. And again, mathematically, it's very simple to lay out. It's all in the execution and who are you partnering with to execute on that vision.
I agree 100% with you. I think there's been a little bit of a shift in the thinking in the market because of some of the things that are happening with the larger private equity backed brokers, that maybe that the private equities were weaning off of insurance brokers, which is not the case. That's untrue. To your point, high margin, residual, you need the product by law. It is the darling of the private equities for all these things. It's recession proof. So I don't think anything that's happening there, but I do think at your size and scale, you are still definitely poised to have another private sponsor if you choose, and when you choose, or Aquiline chooses to take their investment out. And maybe it won't even be Aquiline taking their investment out. It might be joining another private to get liquidity, another private equity coming in side by side with them. We're seeing a lot of that now. We're seeing fund to fund we saw for a while. Sell themselves, they become the seller and the buyer in the same transaction. So there's a lot of ways to skin the cat, but I think that you are definitely at a size and scale that you have that flexibility. And I do still think that the private equities are still very, very hot for this industry, despite what some people may say, because maybe there's been some hiccups at the higher level that maybe really was just a reset of the market. Those larger investors or financial investors that are private were seeing the upticks going, and it wasn't just about how big you are, how big the multiple is going to be. They kind of got a reset, and that kind of shook people up for a bit. But it's never stopped being the darling of an industry to private equity. I mean, I get more private equity consultations and calls and emails than probably anybody, because we've done 9 recaps, okay, in different shapes and forms. And I spoke to this, and one of our podcasts was one of the private equity investors we've been successful with, and there'll be another one next week. And I want their perspective out there to what they're looking at, because everybody wants to know that what you're doing, not only is it going to work, the integration, the organic growth, but that you're going to have that path to liquidity. And all of these things, I always say, if I ever stop doing this, I'm going to write a book, and it's going to be called "It's All in the Recap." It's all about the recap, right? Because that's what you're all working for. You're all working for the exit, and that might be multiple exits and multiple times that you could triple, quadruple, or fivefold, like the ones we've done have been in those arenas. And that's where people can create generational wealth. And getting involved with someone like you, they would never have been able to multiply their equity like they would on their own. It just doesn't happen. Okay, it just doesn't happen. And yes, the multiples are still very good on the transactions. The selectivity is much greater right now. That if you go out to 10 people, where 2-3 years ago with the low interest rates you get 9 or 10 offers. Now if you get half, that's great. But you still 3 or 4 or 5 people you have to figure out. You still have to get it down to that one. And what we try to do is tell our clients to create the biggest problem they're going to have in our process is who to choose. Really finding that right partner to help them do the things that they want to do, and and giving you the opportunity to see people that can be those partners that fit within your framework and your strategy. And Tim, I think, like I said, the deals we've done with you have been very good deals. Nothing's perfect. A lot of it's people and personalities, but I always feel super comfortable when you win one of our deals, that it's not only going to be a great process, is that it's going to close. Just like you were nice enough to say, you feel that when we bring it to you, it's been vetted. I mean, we spend a lot of time in our SIM process. We're really diligenting our client's business they're ready. They're battle tested when they come. They're ready to deal. They're ready to do a transaction, and they're ready to get through a diligence. And, a lot of the credit goes to my people. I have exceptional people, better than anyone in the country. I'll put them up against anyone at any level. Okay. But I really appreciate, the things that you said. And listen, I think Relation is going on a good path. I think you're in the right direction. I think with your leadership, you're going to, the sky's the limit. And I think you'll achieve your goals because I think you're little by little hitting all of them. And what you've done in a short period of time has been very, very strong. And, like I said, I'm very honored to take the time to speak to you today. And this is good for you too, because people can really see what Tim Hall's all about. Okay. And who you are, what you are, and the high quality guy that you are, that I see and I know and, really enjoy working with. And that'll never change, Tim, no matter how long. I'm not quitting, okay, anytime soon. I'm building this company to last. I'm getting my younger guys into leadership to, follow in the footsteps. Mike Fletcher, my partner, has been a terrific partner. Ray Somerville now, has become a partner 2 years ago, and he's only going to be 42. And he's, really been our top producer, really driving our sales effort. And others, that are really good quality people that are going to raise the ranks. And that's what this is about, putting good people together and making sure that they can do what they need to do to elevate themselves. And that's when you got a winning formula. And I think you're doing that, Tim.
What we do fundamentally isn't we serve our clients, right? And this business comes down to three things. It's about the people. It comes down to processes. Good process tends to equal good outcome. And then, in this day and age, it's technology. How you're leveraging it, how you're utilizing it, how you're putting it in the ecosystem so you can make sure that you continue to attract good people that deliver good process.
Because this private equity stuff has really exploded. You're standing strong, you're competitive, and people know who Relation is.
Appreciate the time, Al, and thank you for the ability and to get on here and share our story. So appreciate it. Thank you very much.
Thank you, my friend. I enjoyed it.
All opinions expressed by the hosts and guests are their own and are not necessarily those of Sica Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sica Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sica Fletcher LLC does not underwrite securities, nor advise on, nor effect transactions in securities for the account of others. For more information about your unique situation, please contact Sica Fletcher or visit us at www.sicafletcher.com.